Hey, Steve Spretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value and entertainment out of these videos, all I ask you to hit thumbs up and subscribe. Questions, comments, put those below. We got the big man, Warren Buffett, going in on gold, making a huge acquisition in the second quarter in Barrick's gold miner. What I think I find interesting about this, and we'll kind of premise a lot of this video on this, is that Buffett has been probably one of the most cynical people towards investing in gold, basically calling it a pet rock. And I actually pull one of his quotes here from on his kind of his views on gold. He says back in I believe it was a 2008 interview. He says gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and people pay to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. That was actually in a 2009 CNBC interview with Warren Buffett, who suddenly, all of a sudden, for what appears to be the first time, is going long one of the large gold mining companies, Barrick's, and he actually dumped about the majority of his bank stocks, Wells Fargo, JP Morgan, dumping huge financials and going long into the gold bull market. So I find this very fascinating. This has kind of been a lot of, the premise here is ultimately the bigger picture and understanding the macro framework which is in place. So I think the gold bull market, I think, is very easy to understand. I mean, you have a implicit currency devaluation from global central banks. That much we know, we've discussed. It's very obvious. Just look at global central banks' balance sheet. That will not stop. There's going to be no normalization of balance sheets. There's not going to be a come to Jesus moment in terms of finding your moral compass. No, these guys are going to continue to do what they know, what they think works, and what they are used to doing, which is basically printing money and devaluing fiat currency in order to generate inflation, which is kind of just a made-up number to begin with. And then you look at the bank sector. So all of a sudden this guy's dumping banks. We said, well, banks are on sale. But the outlook for the banking sector is terrible. The outlook for the banking sector in an era of negative interest rates erodes profitability. It actually destroys the banking system. So again, we talk about zero interest rates, negative interest rate policy. There are repercussions for these policies, and one of the repercussions is that you kill the profitability of the banking sector. And so it shouldn't be surprising. I think that Warren Buffett has clearly figured that out and is dumping a lot of his bank stocks here on the lows, or at least very close to the lows. So now, again, all you have to do is look at the health of the banking system, for example, in Japan and in large parts of Europe, where, again, this negative interest rate policy has destroyed the banks. I mean, it basically does is it shrinks, it compresses the net interest margins, so it almost makes issuing loans not very profitable. As you can imagine, you're issuing a mortgage at 2%. I mean, there's just not a whole lot of the spreads are getting compressed. In fact, talking to some of the Canadian banks here, is they've been very aggressive at trying to grow their residential mortgage portfolio, and a lot of them, because the landscape is so competitive, everybody's shopping mortgage rates, etc. So a lot of these guys have actually been issuing new mortgages at a loss, with the hopes that over time they will gain that customer's business and they will be able to siphon off fees from different and various aspects of that sector, right? That could be through stock trading, that could be through checking account fees, etc., etc. But in terms of issuing a lot of new credit, it's becoming less profitable in that aspect. So again, understanding the macro framework, because in my view, I have extremely strong conviction. I don't necessarily have the strongest conviction all the time, per se, in the housing market, but what I do have a very strong conviction is that real yields, the yield between where that nominal yield is, okay, so let's look at the 10-year say U.S. Treasury bond, which is what I think it's about 0.7 at the time of this recording, 0.65. versus the rate of inflation. So the rate of inflation is at about, let's say, 1%. So that means you really have a negative yielding bond. So real yields are going to fall, and I think that they're going to remain suppressed in a longer term fashion. I think I see this. There's a great chart here by Tavi Costa that shows the eras in which the gold bull market does extremely well is an era of real negative yields, and I think that we are certainly entering that era where you have so much debt in the system, and you have to have inflation growing faster than the debt, so you can basically inflate your way out. And so I suspect, in my view, I have to laugh because you're seeing the yields push up this past week because inflation has been running a little bit hot, hotter than it has been. It's kind of surprised a bit to the upside. And people are going, oh yeah, here it comes, like higher rates, like the central banks are gonna have to hike rates, and this is gonna, like, for example, this is gonna kill the housing market. And I think people are really missing the big picture here. The big picture is they cannot like literally listen to what I'm saying. Basically, fundamentally, they cannot raise interest rates. Okay, basically the entire system collapses. You don't even have to worry about like overpriced, Canadian real estate getting impacted and blowing up. Like, you have to worry about like basically the entire system blows up. Forget like Canadian housing is just gonna be like a small microcosm of the big picture. Corporations are levered to all-time record highs. Government debt all-time highs. Household debt like basically all-time. Like, you can't normalize interest rates. So what happens is you can have inflation start to take off. The central banks or the governments basically just change the CPI weighted basket as they see fit. Oh, inflation's not running. So for example, let's look at this. So in Canada over the last 5 or 6 years or whatever, we've had the CPI is averaged, I believe it's about 1.9%, basically 2%. Just under 2% over the last sort of 5 or 6 years. Anybody in Canada, like if you're watching this video, I'd like to hear your thoughts in the comments below. You tell me what you think is your perceived, your real rate of inflation. So forget the 2%. If you're looking at your own lifestyle, how much would you say your cost of living is increasing? Has increased on average over the past 5 or 6 years. Now, again, if you're someone that's looking at the rental market, rents have been going up by close to 10% every year for the last 4 or 5 years. House prices have doubled in the last 5 years. Groceries have been going up until recently. Gas prices had been going way up. So the real rate of inflation is not 2%. I believe, like, in these large metro cities, Vancouver, Toronto, Montreal, Ottawa, where there's some growth happening, people moving there, I think the inflation rate is very close to double digits. So again, it's a made up number, and I think that we're going to see this is that central banks they've already basically come out and said they're going to run inflation hot. Inflation will run hot. They'll put a cap on yields through yield curve control, and they'll slowly inflate away that debt, so that debt burden becomes less burdensome. Now again, don't get me wrong, it's a fine line. They cannot perfectly control markets, but that's certainly the intent. So if you think you're going to sit here and talk about, because inflation's running up a little bit hot, and all of a sudden they're going to start hiking rates and yields, they're just going to let yields. If you think basically there's a free market in government bond yields, I think you're clearly not looking at central bank balance sheets, which will only expand even further if rates start to creep higher over the next weeks and months ahead. So that's kind of my view on that. And again, I think you're fighting this uphill battle, this system that, unfortunately, reality is it's a centrally planned system. It is a system that is in place that you can't fight, and something that I kind of look at, for example, just even in the Canadian housing landscape, we had Evan Siddall this past week. coming out vocally and issuing a letter to the banks saying, oh, hey guys, like, you need to slow down your lending and don't give these private insurers too much business. They should have pulled back because CMHC tightened their credit lending criteria during this economic downturn, and the private insurers obviously didn't follow suit, so they're taking up all the new business, and he's obviously all disgruntled about that. And I admire the guy because I think he is courageous because he is fighting the system, and he's fighting the system from the head of CMHC. But the reality is he's fighting a system that is so large, where you have, again, 69% home ownership rate. You have 5 banks that basically run the entire economy. They create all the credit. They basically run the entire system. So again, I have to laugh because following this public notice that goes out, BNM Bloomberg pulls on, like, for example, they pull on the ex-CEO of RBC Bank to ask him what he thinks of Evans Zadol's letter. Like, what do you think the guy thinks about it? He was the ex-CEO of RBC. What is the dollar value of this guy's stock options in RBC? This guy's probably sitting on tens of millions of dollars in stock options. And that's a one-way trade on real estate. So of course he doesn't want the head of the CMHC mortgage agency coming out and telling banks to pull back and to slow the real estate market. Again, fighting uphill battles, and I think, unfortunately, as I'm starting to accept anyways, it's unfortunate, but the morale compass of policymakers is fundamentally broken, and it's a system that you're kind of pushing up against. So that's kind of what I want to discuss this week. Obviously, super bullish still. I think that, as somebody said earlier, you are in the second or third inning of the gold bull market in a game that is likely to go into extra innings. And I think Warren Buffett, the biggest gold bear, has clearly figured that out by going long gold, dumping financials as we go inevitably towards zero to negative interest rates for the foreseeable future. The Bank of New Zealand was out this past week saying that negative interest rates are, quote, being actively prepared. So another central bank that will be going into the zero negative interest rate territory, and I suspect many more to follow. So hope that video helped. Otherwise, give me some YouTube juice, thumbs up, subscribe. See you next week.